For 2012, actually, it's going to be much like what we saw for 2011 in terms of what the outlook for small business in the U.S. will be. Specifically, I think what we'll find is that small business will find it challenging to obtain the credit that they need to be able to kind of build their business. I think we'll also see that that they'll be plagued by many of the same issues that they faced last year in terms of building their client base, their customer base, and whatnot, and that they'll be challenged again, as in 2011, in building jobs for most folks. Well, this being a presidential election year, I think what we're likely to face is that there'll be a lot of posturing and a lot of rhetoric around what Congress and the administration could do for small business legislatively. But I wouldn't expect too much to occur in terms of changes to or moving through that legislation that we saw proposed by President Obama around the American Jobs Act. Instead, I think we'll see some limping along for the next 12 months. Again, because it's a presidential election year, you typically don't see a great amount of significant legislation coming out during that period, and that will also be the case, I think, for small business. Extending the payroll tax cut for business, for small business, I believe, is going to be a somewhat of a non-event. On the one hand, the 2% reduction that all of us can experience from that is beneficial for sure, but in the grand scheme of things, in terms of really significantly improving the outlook for small business, I don't see that that will do as much as it would be to try to enhance the availability of credit for them to build their programs and businesses. Well, there was a recent survey that came out within the last several weeks, actually a couple of surveys. And interestingly enough, the outlook for small business in 2012 is as bullish as it's been over the last year or so, along several dimensions. I think folks are signaling that, small business owners are signaling that they see improvement on the horizon, both in terms of their overall revenues, in terms of their ability to obtain new customers and clients, their ability to actually improve somewhat on the jobs front as well. So interestingly enough, there seems to be more optimism going forward for the next year than we've seen in the recent past. So the Small Business Saturday that we saw happening after Thanksgiving and whatnot, and kind of getting ready for the Christmas holiday, was significant. We saw, I think, over 100 million Americans taking place and supporting small businesses, which is terrific. In fact, I think it's a number somewhere quoted as more than 15% higher than what people expected on a pre-Thanksgiving basis. From that standpoint, this is hugely important to small business and really is a shot in the arm for them in a positive way. My only concern is that I think it's somewhat of a short-term effect. We're seeing good retail sales numbers and whatnot for the Christmas season overall, but I don't know that this is really more of a longer-term type of signal that consumers are really readily going to be out there opening up their pocketbooks and helping small business for the long term. So the credit outlook, that is the credit availability outlook for small business owners in 2012, in my opinion, is probably going to be on par and in some cases maybe not as good as what we saw in 2011. If you break that down and look at what was going on for the Small Business Administration, they hit a record year in terms of their lending. I think the number is something like $30.5 billion of loans that were made. Because of what's going on in Congress and some of the stinginess that we see there too, it's unlikely that we'll see record lending going on from the SBA. On the banking side, the provision of private loans to small business owners, I would say that because banks still remain weak and some of the concerns that they have right now, I wouldn't expect a great deal of flexibility opening up for bank loans for small business owners over the next year as well. I think it'll be, at best, as I say, more like what we saw on par 2011, possibly a little bit better on the banking side, and probably a little bit less than what we saw on the SBA side from a lending standpoint. So banking for 2012, we can actually go back and look at what happened in 2011 to get some signal of what we can expect going forward. Banking overall was one of the weak sectors of the economy and will remain weak as a result for a variety of reasons. The first thing that needs to happen is there has to be some resolution of the sovereign debt crisis over in Europe. Without that, I think you'll have a guilt by association type of an effect here with U.S. banks for various reasons, including the fact that there is a considerable amount of exposure that some banks have to other European counterparties abroad. So from that standpoint, I think we have to see some resolution for there to be significant improvement coming back into our own banking sector. The second thing that's of note is ongoing implementation of the Dodd-Frank Act, which was this historic and significant regulatory reform affecting basically all sectors of the financial industry, including non-banks, the shadow bank industry, hedge funds, private equity funds as well. So this is quite expansive, and we'll see continued implementation of various rules. Some of those rules that will affect the largest banks include capital surcharges as we get into our Basel III implementation of surcharges on the very largest and most systemically important institutions. And what this means for consumers and for bank customers is that for banks in general, this creates a significant regulatory burden. I think we've seen that through in 2011 with respect to the changes that took place with the interchange fees that were assigned to debit cards, and the fact that those revenues have now dried up significantly for our banks, and they're looking to try to get those fees from other sources. So what you'll see, I think, is some new bank products, prepaid debit cards, prepaid credit cards that'll come into fashion, and I think will be attractive to the banks. I'm not so sure about how that will be the case with consumers. So I think bank regulation will certainly be a hot topic for 2012, will remain that case. I think from a lending standpoint, it will really be dependent on what happens with the U.S. and broader global economy from that standpoint, to see whether or not there's some additional sort of relaxation in lending standards, to see sort of the credit availability start to come up again on the banking side. So that's kind of the general outlook that I see. On the housing front, housing for 2012 will remain weak. We are, as I like to say, in the middle of the cycle from where we started from at the beginning of the crisis. We dug ourselves an extraordinarily large hole in terms of where we have to come from and from a house price depreciation standpoint. One of the other significant factors over the course of the next year will be what happens with the pace or the acceleration of foreclosure proceedings. Banks, in the wake of the robo-signing issue, there was a moratorium in place for foreclosures. That has sort of been lifted, and now toward the end of 2011, we're seeing more activity coming through in terms of bank proceedings of foreclosures, and that will simply put more properties on the market, will further depress prices, and will create, again, further drag on trying to get stabilization in housing markets in 2012. So my prediction will be that home prices will still remain very weak, if not probably decline a little bit more before stabilizing and start to see some small improvement, I believe, by late 2012 into early 2013 at the earliest from that standpoint.